Taking a look at 60-minute breakout short, one question would be, why would I implement a trading system with a losing equity curve in my trading systems portfolio? So this is the equity curve going back about 7 months, and I implemented this on August the 1st right here. So this is what this equity curve looked like. Before this vertical red line going back here is what we're looking at from a 7-month period. Why would I implement this equity curve? You can see what it did afterwards. After it was implemented on August the 1st, and we started trading it live on August the 9th. Right in here is when we started trading the current portfolio live again on August 9th, right at that low. And this strategy has reversed since that time frame. And so you see it was in a strong downtrend in the short term, and then it reversed to the upside. This strategy will take short trades. It can also reverse to the long side off of a short trade signal. It doesn't have an independent long trade, but it can take short trades with a long side reversal. So I want to first take a look at a 10-year chart of this. Here is a 10-year chart of this equity curve, and this is this equity peak right here. Let me pull the pin out so I can show you more accurately. So this right here is around June of 2020, 6/2020. And you know, during the pandemic, there was a massive sell-off, and then the market reversed around March. And so this strategy worked during that incredible volatility. But since June of 2020, it's been a volatile sideways equity curve. And you can see this big downtrend right there in this equity curve. And we started when it was in this downtrend, and it's since reversed. And so one of the things about portfolio trading system design is we work with cycles. I want to show you that. So on my market portfolios page, you can come down here to portfolio design, and I've highlighted strategy cycles in relation to market cycles, run-ups, and drawdowns. I don't like to trade a long list of strategies that are correlated, that are also at a run-up. That might be a mistake you would make if you were new to trading. You would find the best strategies all in a run-up, and then find out later they were correlated. And so you want to trade different methodologies, different exit techniques, variable holding periods. Most of our strategies are day trade though. Trade strategies in run-ups and drawdowns. We want to combine strategies that are at equity peaks with strategies that are in drawdowns, and then wait for the portfolio to go into a drawdown to start trading it or add contracts. We combine classic strategies with long histories with some newer strategies, mainly strategies that we've had for a while, or methodologies that we have had for a while. And different methodologies are represented in a wide range of strategy statistics, such as winning percentage. Some of our strategies have a very small percentage of winners because we have very tight stops. Others have profit targets that are fairly close to the entry price, and those represent high winning percentages. And so combinations of different types of methodologies is represented in the statistics of your trading systems report. I want to show you another reason why I did this. So here is a dummy strategy that I do not trade, but I just test the market environment. And all this does is it buys at the open and sells on the close. You can see how extreme it was right here through August, around mid-August. It just ran up from the Fed meeting low, and there was just constant buying at the open during this time period, running this up, making it very impossible and difficult to short. And you can see the markets go through cycles like this, where just extreme cycle of buying followed by, you know, a more efficient market that just doesn't go up every day. And so we get these inefficient markets where they go up every day, and they get to the point that's extremely extreme, and it could be a good time to take some short trades, managing your risk. And that's what we did with 60-minute breakout short, and that's why I added it to the portfolio at the beginning of August. And you can stay tuned for all of our updates. We are working on a 1-minute version of this as well, and so it's more accurate. But that is something to consider when you have trading system design. It's all those factors we talked about: different cycles, different market cycles, different strategy cycles, and equity curve cycles. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.